No, let me tell you the exact information. It's on June 18th, but I'm pretty sure it's on 8 a.m. Let's review that right now. Oh no, this is right. This is right. I was confusing this class with the class, the other class I have. So it's June 16th from 7 to 9 p.m. You have 2 hours to deliver the final exam. The final exam consists of 20 questions. They are multiple option. You have 4 options to decide in those different questions. It's a business case, as I already told you before. It's Roku 2021. It's a pretty new case. And I'm going to give you the case 1 week before for you to read it. And you are going to have these 2 hours to answer these 20 questions. What kind of questions are going to be here in the final exam? There's going to be some theory, specifically in strategic management, the book of strategic management. So review those chapters that we have been seeing so far, the different strategies we know, the Porter strategies, internal, external analysis. And also you are going to have a strategic questions. So you're going to see a different data, different graphics, and some answers might ask you, what would you do with this information, and several options of strategies, and you have to select the most sustainable one. So do you have any questions regarding the final exam? Okay, the case is about 4 or 3 pages long. It's not that long as the one we have been seeing before, but you will have 1 week to just review, take notes, and you have 2 hours to answer the questions. So for the final exam, there's no extra need. You just need to go to Canvas, and it's going to be available there. Yes, Maria Fernanda?
Hi, profe. What's going to be no sé, la ponderación del examen?
Oh, it's here. Everything is here in Plan de Evaluación. I don't know the view you have, but it should be something similar. You have there how everything we are doing so far is weighted. So final exam, 10% of the final grade.
Okay, thank you.
Okay, more questions? Okay, so we have almost a month until this happens. So let's go to today's class, which is the income statement. So you know I have trouble with this slide, so let me know if it is moving. I'm in the second slide, definition. Can you see definition?
No.
No.
We're in the first slide.
So
Now we can see definition.
is it moving?
Now we are in the second slide.
Okay, let's try once more. So is it moving?
Yeah. Now
Right.
we-
In our importance.
3 times now. It was 2 times I have to try this before it worked out, and so now it's 3. Never mind. So the income statement. Definition. The income statement is a financial statement where we can see our income and expenditures. Remember, the basic formula for profit is income minus expenditures or expenses or costs. In this case, basically everything is summarizes in a profit that we can see in this financial statement. You can see if you are profitable or not. In other words, you are making money or you are losing money. This financial statement, along with the balance sheet and cash flow statement, allow us to take better decisions. What we are going to be seeing in this term is just the income statement and the balance sheet, which, if you remember from the cases we have been reading so far, those are the 2 basic financial statements that we can see in pretty much all of the cases. Cash flow statement, we are not going to deal with that. So this is how a income statement looks like. This is from Aston Martin, the Aston Martin case. We can see here revenues. I'm not going to get
Teacher.
too detail in this. Yes?
We are in the fourth slide. Well, I'm seeing the importance.
Oh. Okay. Are you in Aston Martin now?
No.
Hmm. Okay, let's try once again. Is it moving?
Yes.
Okay, so here we can see the Aston Martin income statement that was in the Aston Martin case. I'm not going to get too much detail in it because that's what I'm going to do at the end of the presentation. But here you can see the general structure of an income statement is your revenue, your cost, and how much profit you are doing from the subtraction of the cost from your revenue, okay? The importance, the income statement, as I already told you, help owners or the strategic or the management team, the executive team, to decide how can we generate more profit. Remember, I don't want to say all of the time, but all of the time companies are trying to gain profit. Even if it is a non-profitable one, it has to have some money to keep running. So with this statement, we can see where the money is coming from and where the money is going in terms of cost, and decide if we want to decrease costs or increase revenues, and in which ways we can do it to analyze each of the different factors we have in revenues and costs, or both, to start doing this, allowing this margin to be even higher, the profit margin. So with this information, we can take even more or better strategic decisions. This is important. So the income statement, as you can see here for Aston Martin, is a yearly statement. So if you remember short-term versus long-term objectives, annual objectives are considered short-term. So the income statement shows yearly information for short-term objectives. In other words, short-term objectives have to deal with operations. That's different from long-term objectives, where you are deciding strategies for 5 or 10 or more than 10 years. This income statement can help you in those long-term decisions. However, since they are being performed each year, that has to do with short-term objectives. Short-term objectives is for operation, not a strategy. Not a strategy in terms of the whole company, but a strategy in terms of operations. So who uses the income statement? We have two different parties, the internal and external. In the internal, we have board of directors or company management. So essentially, the people who is managing or running the company in terms of a strategy. It can be the strategic board of directors, the C-levels, or even investors that belong to the company. External investors that do not work in company management, they are just investing their money in this company. Creditors as well. If you want to have a credit for, I don't know, some project you have and you want to go to a bank, creditors see this statement to ensure that you can pay the money you are being loaned. And competitors, so you can have this information, actually, the income statement for some competitors. It is not that easy to get that information. However, there are some portals of software where businesses have to upload this kind of financial information. So we can have that at first hand. Each income statement is different because every company has different sources or streams of revenue and different streams of cost where the money goes outside the company. So I'm going to talk about different major components that we can find or not, but we usually find them in most of the income statements. So revenue or sales are operating or non-operating. If you remember the value chain analysis, the primary activities are those ones who has to do directly with the service or product we are selling. So that's operating. Goes from your sources or your providers, the manufacturing, the delivery, and even after sales, the customer service. Non-operating are those sales that has to do with the support activities such as HR, finance, management. Second major component, cost of goods sold. So whenever we are selling one product, it can be a car or, I don't know, nails, shoes, there's one cost associated to producing one of these products. That cost associated has to do directly with how this product is produced, delivered, and even the customer service as well. All of the different costs we are incurring during our primary activities. Those are the cost of goods sold. Gross profit, that's the profit we get from selling one product or one item. So how do we calculate it? The revenue we get from selling that one item minus the cost of that good sold. So this gross profit is not for the whole items we sell. It's just for the whole items if we are not talking about margin. But what I'm saying is we are not considering the costs that are not directly related to the item we are selling. So gross profit has to do revenue from the sales or revenue or sales we got from selling that product or those products minus the cost associated from producing that or those products. Gains is the money we get from aside from our product or service, such as maybe we sold one part of the company, that's money we gain. Maybe we sold some machinery that we no longer need. That's not related to our item or our product that we are selling, but somehow we're getting more money. It can be even, how do you say it? Subsidies from the government. No es cooperaciones, es donativos. Can be donativos from other companies or other organizations. That goes into gains. Expenses. So these expenses are, we have two different ones, operating and non-operating ones, are the same as the revenue we had here from your primary activities and your support activities. Advertising expenses, marketing, how much money do we expend in marketing? Administrative expenses, it can be HR, organizational expenses, salaries, healthcare as well. Depreciation. So if you don't remember this term, everything, the assets a company have, it can be machinery, it can be cars, it can be computers, they lose their value over time. So we take that into consideration in our income statement. EBITDA, I think I have mentioned this before, expenses before taxes, depreciation, amortization, and interest. That's interest, the I, taxes, T, depreciation is D, and A is amortization. So amortization is how much debt do we have from the money we loaned. And if we apply amortization to assets, it's somehow the same as depreciation. But most of the time, amortization is going to refer as the money we have to pay from the money we loan from the bank or other investors. The net income is what we have after paying all of the things that we have to pay to the government, such as interest, taxes, depreciation, and amortization in terms of the money we loan. That's the net income. Also, profit margin. That's the profit is the last one when we take our revenue minus our costs. Sorry, I mentioned this wrong. The sixth one is net income, is before EBITDA. I forgot about that. So let's review how can we see these major factors in our income statement. So here we can see we have total volumes, is how many units we sold per year. Net revenue for those, for that volume sold. Average selling price per unit. And we have the cost of sales. You can see that cost of sales goes here in in the revenue part, because we are talking about the goods we sold, the products we sold. And fixed and other costs doesn't relate to the product anymore in the fixed cost parts. Here in this case, they don't have desglosado all of the different factors that belong to cost. They just get one number for cost. Here we have the EBITDA, which is the money we have. That's this minus this, as you can see. Negative numbers are in parentheses. So 120 minus 62, it's 58, sorry. So this is before we pay all of the depreciation, amortization, taxes. Here they just paid depreciation and amortization. So they are taking out the D&A and they are calculating EBIT. And we don't have more information for interest and taxes. So that's where this income statement gets. Non-recurring items. This is, in other words, the gain. We have some gains and some losses as well. Finance, income, expense. I told you we have the amortization. Here they're talking about the amortization. We have to pay some money from loans, and this is where this is represented. So the final profit after taxes, which is this and this, we get what we get each year. So as you can see, if you go to other different income statements from other business cases, this structure is still the same: revenues, cost, and then your profit. As the same way that we calculated in Ryanair A, if you remember. In the Ryanair A case, we calculated revenue and we calculated cost, and then we calculated the profit. So that's what we are going to be doing for this week's activity. We are going to develop an income statement for our company in the fishing simulation. Let me give you a brief summary of everything I said. So the income statement is a rich source of information because we have how our company is behaving in terms of financial health. It gives us a timely updates. They are done every year. It shows a company expenses, income, gains, losses, and you can put this into a mathematical equation in order for you to take decisions to maximize the profit by lowering costs and maximizing the revenue. So this information is being given to the executive committee each year. It is pretty common that executive committee has at least one meeting with all the investors, and they show you this kind of information. Okay. Do you have any questions with the income statement? Was it clear? Do you see everything clear here, how the money is moving? Yes, no?
Yes, all good.
Okay, so once we do our own income statement, I think everything is going to be much clearer because you are going to see where the money goes. And if you remember the hustle from financial analysis, is that all the numbers have to match. So the total profit in terms of the fishing simulation, where do we find profit? What's the number or the KPI for profit of the simulation? where can you find your profit? Do you have an idea? We can find our profit in the bank balance. So remember, all the money we got from our revenue from selling fish and all the costs are calculated there in your bank balance. So you can have a positive bank balance and they give you some interest rate for having a positive bank balance, and they take away some interest rate, you have a negative balance. So profit can be seen in your bank statement, or your bank, the money you have in the bank in the simulation. So your revenues minus your cost should match this number, okay? So I don't want this to look absurd, but I'm going to show you a 5-minute clip that depicts in a hilarious way how these kind of statements, financial statements, are used. So,
Empecemos. No, pues divina las carpeticas, ahí me tiene. Sí. Ay, ¿estos papelitos para qué son? Para que nos pasemos todos noticas y juguemos.
Mi estimado presidente, aquí están las instrucciones para que continúe su rutina de horror con Betty. En primera instancia, encontrará las tarjetas que deberá continuar colocándole en el escritorio cada mañana a su mostrete, con su respectivo detalle. No se le vaya a olvidar porque yo no voy a estar para hacerlo.
Un momento, ¿qué significa esta primera página?
No, papá, por favor, no le hagas eso, no le hagas eso. Aquí hay una equivocación.
La primera página, don Roberto, es un resumen del balance general.
Este no tiene la carta.
¿No trae la carta? Parece que solo venía en nuestras carpetas.
¿Qué es lo que pasa?
Niña, por favor, ¿qué son estos pasivos de 97.000 millones, 15.000 millones de pesos? ¿Qué es esto?
Betty presentó el balance real.
¡Un momento! Este no es el balance que se iba a presentar a la junta directiva. Aquí hay una equivocación. Beatriz, por favor, retire todas las carpetas.
No, doctor.
¡No! ¡Yo hago! Por favor, retire con todas las carpetas. Me disculpan, pero esto se retira acá. Cerramos la junta directiva.
No, Armando, aquí la junta no se termina, porque aquí no hay ningún error. Roberto, te respondo, ese pasivo por 97.000 millones de pesos, por casi 50 millones de dólares, es una obligación que Comoda contrajo con Terramoda. Y no únicamente eso. Resulta que Terramoda tiene la prenda sobre el establecimiento comercial de Comoda.
¿De qué están hablando?
Margarita, de que en la práctica, Terramoda es la propietaria de Comoda.
¿Pero qué es eso de Terramoda?
¿Tú no recuerdas la compañía unipersonal de la doctora Beatriz Pinzón Solano?
Usted no sabe de qué está hablando.
¡Sí que lo sé, Armando! Se acabaron las mentiras, Armando, se acabó el jueguito. Este es el boletín de registro mercantil de Cámara y Comercio. Aquí aparecen todas las cifras de las cuales estamos hablando. Te llegó la hora, Armandito, de que des la cara, de que dejes de decir mentiras y enfrentes la realidad. ¿Qué pasó con la compañía que te dimos? Ecomoda es la comidilla de todos los corrillos en esta ciudad. Armando, te entregamos una empresa. ¿Qué le hiciste? ¿Qué pasó con nuestro patrimonio? Con el patrimonio que fundaron tus papás y los míos. ¿La perdiste? Porque ya no existe, Armando.
Sí existe. La tengo protegida.
¡Estúpido! ¡Está embarcada!
¡Y llegaron los meseros!
¡Patricia Fernández! ¡Se retira por aquí! ¡Se de aquí!
¡Lárgate con tus meseros! ¡Aquí no entra nadie! ¡Lárgate!
Okay, guys, this kind of drama, it might seem kind of absurd if you think of, but something this happens, and I have seen some pretty... Oh, sorry, it is still... Imagine these people with a lot of power in this company, with a lot of money, investors are even there. To see how the financials are not going so well, and to maquillar or to make up the numbers, it's sometimes you can see they are making up the numbers for it to look financially better. This is a parenthesis, but have you heard about the Ponzi scheme? Well, the Ponzi scheme is a fraud, a kind of fraud, where you take money from investors to pay the other investors that you already have. So it might seem as your money is having more money, but it doesn't have much money because you are taking just the money from new investors to pay the return on investment to your previous investors. So a lot of decisions and strategic decisions have to do with dealing with numbers and financial statements, because at the end of the day, what we want to maximize is our profit, okay? So yeah, this is a hilarious way to do it, but you will always find the balance sheet and the income statement, at least in an executive summary, because that's how your company is behaving in terms of finance, okay? So questions before we go to the break and we come back and do the frameworks for business? All good? Okay, so let's come back here at 7:50. Guys, I just want to make sure I said this right because I think I confused it. The net income is income before paying all the taxes, amortization, depreciation, and income, okay? And interest, sorry. So it's before the EBITDA.
Thank you.
Profe, ¿puede repetir, porfa?
Yes, so the net income is before paying taxes and interest.
Okay, thank you.
Sorry guys for this one. I just said it wrong again. I just always confuse gross with income. It is after, es después del EBITDA, es después de pagar todo. Me disculpo nuevamente. Repito, el net income es después de pagar todo lo del EBITDA. Los intereses y después.
¿Es antes o después?
Después, una disculpa por la confusión, siempre me confundo con gross y net, pero es después.
O sea, estaba bien.
Sí, estaba bien como lo había dicho.
Ah, ok.
Pensé
Gracias.
que lo había dicho mal, pero no. Es después de pagar todos los intereses y taxes. Okay, so before I go to the activity, I want to show you other income statement. I think this is more structured. Here we can see the total revenue. Here is the mistake I made. Remember always, gross means before, net means after paying the interest, taxes, depreciation, and amortization. So here we have the gross profit, which I told you was total revenue minus the cost of the revenue, which is the same as cost of goods sold. Expenses, then we have operating income, more expenses, the EBIT, that's the earning that we have before paying interest and taxes. Then we pay the interest and then we pay the taxes. And we end up with a net earning or net profit or net income of this amount. So generally all the different income statements that you find, I think I have this balance sheet. Again, here's another one, revenue. Then this is a more explicit one because está desglosando each of the expenses and how much money you have after paying those expenses. So as you can see, there's no a defined structure when showing income statement. You just have to follow revenue minus cost, and that's equal to your net income or net profit. Okay, that's the, let's say, the standard or the general structure. However, you can customize it depending on your needs, okay? So now let's talk about frameworks in business. Frameworks in business help us to organize our ideas. When you are presented with a problem or with a problem to solve in a case or a business case is not only written, it can be a real business case. The different frameworks available that will help you to organize your ideas. The basic framework that we have learned so far is a profit framework. Profit equals to, and what we